Bitcoin is simply decentralized code with no counterparty risk. There is a finite supply of 21 million tokens that will be issued all the way up to 2140. The miners are involved in validating the blocks of transactions, and as they validate these blocks, they get tokens as rewards. As they validate, they use powerful supercomputers that use exahashes, and to keep that simple, it just allows the network to grow more secure and more stable. Now, there's value in that. And that's where the focus of this video is, in the value of the fundamentals. But there is also a technical aspect to understanding this asset. It's a high beta performer, which means that it deviates to the upside more than the traditional stocks and assets and indexes like the S&P 500, and it also declines more to the downside. And when you have economic uncertainty on the macro, it can deviate higher and those swings can be more violent. So for example, if the S&P 500 goes up 10% through the year, Bitcoin can go up hundreds of percent. But also if the S&P 500 goes down 10%, Bitcoin can go down tens of percent more. And so I want to go through in this video the fundamental developments that are happening behind the scenes that signal that this asset and this particular cryptocurrency has potentially long-term staying power. I want to go through the macroeconomics and some of the signals that are there and why there is a lid that's truly preventing a lot of growth in these asset classes that have a high beta performer deviation. And then I want to go through the MVRV score, which is just a score that gives you an idea of the market value of the realized value and how much of the coins on aggregate are trading with high levels of profit. And then hopefully at the end of this, it will be able to connect the dots to why this asset is something that's always mentioned and it's hard to avoid. So let's go. It seems like historic events are being publicly declared at record pace at the moment. With the White House Crypto Summit, this signaled to the world that game theory is now in play, where as the US decides to start a strategic Bitcoin reserve, this would mean that any economic player would now need to find exposure to this asset to not get left behind, which is one of the biggest signals that you could ever imagine for a new asset. However, with any news event, there is always the immediate sell-off afterwards. This tweet came from David Sachs announcing the plans for the US to start to stockpile strategic Bitcoin in their reserve and hold this for the long term and actually add more. It still didn't really get well received by the market, and a lot of speculation was then taken out of the market. This bill is real, and as it reaches the Senate to be voted on to become law, this could potentially lead to the US procuring hundreds of thousands of new Bitcoin to their strategic reserve, which would lead to them becoming the leader in this stockpile and force other countries to start to consider the importance of having exposure to this. Let's continue with the adoption and the fundamentally bullish news developments that are continuing to happen in this space. Let's go through these ones really quickly. Bitcoin held by public corporations is increasing, and it's nearly 2x what it was in 2023. These are the largest companies in the world, and they have cash and cash equivalents. And then the only company here that has just Bitcoin in its treasury is Strategy. And what I want to point out here is the ability for this company to continue to raise capital in order to buy more Bitcoin. So why would they have just Bitcoin on their treasury? Why wouldn't they have cash? Now there's a signal there. And this is someone who I really respect in the space, who understands commodities, understands traditional assets, and he moved from gold into Bitcoin. And he asks this very important question. Why did capital just suddenly start dropping on MicroStrategy from the sky after years of small raises? Basically, Michael Saylor, the CEO of Strategy, he raises capital by issuing different types of preferred stock and also debt and at-the-money offerings. And by doing that, he raises capital to be able to buy Bitcoin to add to the strategic treasury that he has. How is it now that he's able to raise billions so quickly within weeks? There's got to be a reason for his understanding of the long-term potential value of this asset. Now, there are historic precedents for a strategic Bitcoin reserve. America bought Manhattan, Louisiana, California, and Alaska. And you can see they paid $50 million for Louisiana, which is now worth $12 trillion. They paid $18 million for California. The payoff is $8 trillion. The Alaska investment was $7.2 million, and the payoff is $1 trillion. So you can see that these historic precedents have been set. So fundamentally, if you look into the long-term value of what Bitcoin could become, just like these states that were bought by the US, they accrued in such massive ways over the years, over the decades, that could be a signal to potentially what Bitcoin could become. And then this is just a graph that shows that Bitcoin adoption is still early. Addresses that have more than one Bitcoin are only under 1 million. So there isn't actually a lot of the global population that hold more than one Bitcoin at this point, which means that the asset is still very young and very misunderstood. This is really the intrinsic value part. And in this segment, I'm just going to show one picture, and it comes from a book called Soft War by Jason Lowry. And this is one of the most well-kept secrets. When you understand that land, real estate, gold, oil, and equities, they all require protection and defense from either a rule of law or from a military. And if you take away the monetary premium and you start to monetize Bitcoin, which is protected by electricity and code, you start to protect human lives, as the requirement for monetization of Bitcoin is with code and energy rather than the requirement of lives to defend real estate, oil, gold, and equities. And that's just something that really points out the potential security that this could bring to countries and to people. And so it really stands out as a signal to the long-term intrinsic value of what this could be outside of it being a monetary unit or used as a store of value. It could be also a way of protecting the economic and sovereign security of a country. An old phrase in investing is the markets can stay irrational longer than you can stay solvent. That is so applicable to especially crypto and Bitcoin because the liquidity is hunted and people leverage their positions in order to maximize the returns on the upside, but also that leads to destruction on the downside. So if you look at the sentiment, this is a really important signal and insight. A year ago today, the first circle shows that we were at extreme greed, and the price in March 2024 was actually between 65 to 70,000. Whereas now we're at extreme fear, and the price is trading over 80,000. So it shows that there's been a change in the type of buyer, change in the sentiment, and a change in the investor in that short period of time. Here's a graph that shows the liquidation events, some of the biggest liquidation events that we've had in crypto. So you've got Celsius and 3A Capital. That collapse led to a massive liquidation event. The FTX collapse led to a massive liquidation event. And actually, the more recent weeks have led to the highest liquidation hunts we've ever experienced. And so those that use leverage in this market will find themselves being targeted, especially if this leverage is in the high multiples. This is a really interesting graph. It shows the futures open interest in orange, and that line starting to come down, which means that there's a lot of leverage that's been taken out of the market since Bitcoin traded over 100,000, which is a necessary, natural movement which needs to happen in order to reset the price. But also the price takes a hit as well as this leverage starts to come out of the market. Less investors, less speculation. The price is also going to start to come down as well. On the flip side, there is now record option put volumes, which means that people are starting to basically hedge and go short because they're worried about the current direction of the market. They believe that prices will come down. And usually the max pain is where the majority of people position themselves. So if there's more open short interest, it usually means that the market goes in the direction to liquidate the shorts. Now, this also means that people are starting to get worried, and at the last minute, the house is already burning. You now decide to take insurance out. And so sometimes this represents the last minute dive into hedging your position, even though maybe at this point we're at the bottom and it's quite hard to go much lower. In the last segment, let's focus on the macro lid that's keeping things suppressed at the moment. I want to go into the beta index, which is the most volatile pool of stocks. And the signal here is during COVID, there was this really steep deviation, and you can see that massive retracement, the yellow line. But the blue line is showing the current performance of the beta index. And that's actually from its starting point gone down further than COVID, which shows that at this point, during a black swan, we have that massive retracement. The retracement that we've experienced is just as severe, but I don't feel like there is a black swan at the moment on the horizon. But on the other side of this is the sentiment indicator, shows that from that high starting point of plus 2.8%, we're now at 0.2%. The dramatic decline from such a place of euphoria to a sentiment that's still not that low compared to prior bear markets and black swans in the past. But because that starting point was so high, you can feel the euphoria in the market has been taken away because of the macroeconomic uncertainty with the tariffs and the new administration and that economic transition. That massive drop from euphoria to now basically depression is what is felt across a lot of the more risky assets, especially private equities and also Bitcoin, which is a beta performer to the upside and also to the downside. This data really stood out to me. You can see the circles over the recession spikes where there are record layoffs. And in those recessions, these spikes are quite high. But the current spike has come outside of a recession, which shows that there are real economic concerns that are keeping a lid on the growth of risk assets. And you can see again, the unemployment claims have spiked up. And what this means is that the Federal Reserve needs to start to loosen their monetary policy. So instead of being in quantitative tightening, they need to start to go into quantitative easing, which is when the money supply will grow. And when the money supply grows and interest rates come down, that usually leads to risk assets growing as well. And one of the assets that's on that risk curve is Bitcoin. And so that usually has a real correlation to the Fed's monetary decisions when they start to ease and they start to reduce the rates, but also when the money supply grows, that's usually when Bitcoin's value and price grows as well. Let's talk about the macro recovery over the next 3 to 6 to 12 months. An economist called Tom Lee from Fundstrat, one of my favorite economists, he's managed to find this really historical data that's very useful, and it shows that the 20 fastest market corrections since the 1950s. Now, the current correction that we're going through of minus 10% is the fifth fastest, and it's on average 20 days for these corrections to happen. And when this happens, it's what happens next that's really interesting. A month after these declines of minus 10% at this fast rate, the S&P has a 6.3% on average return, positive. Then, when you extrapolate this over 6 months, the increase grows to 14.9%, 6 out of 6 times. And then the really important one is 6 out of 6 times with these fast corrections, the next 12 months provide a 20.8% return. So what this shows me is when you have these sharp declines on the index, the NASDAQ and the S&P 500, which represent the 500 biggest companies in the world in America. And if they decline at this rate, the recovery over the next 3 to 12 months is historically positive. If you got any value from this video exploring the macroeconomic indicators that can help understand potential recessionary recoveries and patterns that show volatility and how all of this applies to understanding how assets move, then like, subscribe, hit the notification bell. Not financial advice, just hopefully entertaining, hopefully eye opening, and hopefully useful to give you an idea of why markets move in certain ways and how this can be good to have in your armory of information. And so, applying all of this to Bitcoin, I like to look at the MVRV score, which is the market value over the realized value, and it shows how the aggregate of the coins, is it trading at a high profit basis or is it in a low profit basis? And at the moment, you can see the MVRV score is currently 1.7. And in the past, it's reached as high as 6. So in 2021, it was at 60,000 and the MVRV score was nearly 6. Whereas now we're trading at over 80,000 with an MVRV score of 1.7. So that just signals to me that the strength of this asset over time is trending upwards. So irrespective of the declines, irrespective of the volatility that can be truly difficult to absorb, the directional trend is up and to the right. And the strength is growing because at this point, the price is a lot higher, but the euphoria and the sentiment is a lot lower, which shows that the satisfaction with this price for a lot of people is actually quite low compared to in the past, where this would have been a euphoric moment when Bitcoin in 2021 was trading at 60,000. So it just gives you a guidance. So it just gives you guidance to understand the direction that this asset's going to go in over the next 5 years, 10 years. And it's a great potential savings technology, a great potential network for sovereign security, and an interesting asset to just understand whether you want to expose yourself to it or not. It's a decision you need to make yourself, but it's just an understanding that gives you an idea of the reason why this asset's talked about so much, and it's something that continues to keep coming back. So again, if you've got any value from this video, like, subscribe, drop a comment down below. I will see you in the next one. Thank you very much.